Hello everyone, thanks for tuning in. I'm Emily, the home bookkeeper, and on this channel I help business owners and fellow freelance bookkeepers navigate the ever-changing QuickBooks Online, while also sharing insightful videos on all things business ownership and finance. Many business owners aren't aware of the abundant number of small business tax deductions out there that can take the sting out of tax season. You may be thinking to yourself, what exactly are tax deductions and how do they even work? The IRS defines a business expense as a cost of carrying on a trade or business. And generally speaking, these expenses are usually deductible if the business operates to make a profit. To be a deductible expense, the expense must be ordinary and necessary per the IRS. When you deduct an expense on your tax return, you're lowering your taxable income and therefore reducing your tax liability. By doing so, you're reducing the amount you owe to the IRS each year, which means you have more money to invest back into your business. Before you go and file your taxes, you should have a general understanding of which business expenses are deductible and which are not. Like most tax laws, the rules around deductions change all the time. So keeping on top of it, at minimum, is an annual task. The most recent Business Tax Deduction Act, the Tax Cuts and Jobs Act, took effect in 2018 and started impacting tax returns filed in 2019. Use this as your guide as you prepare your tax return, and always consult the IRS guidelines on small business tax deductions if you're looking for the latest information. Even when armed with tax deduction know-how, small businesses still miss out on deductions, and it costs them. In today's video, we are covering a list of 10 deductions that small business owners tend to overlook. Make sure you have these deductions covered as you plan for your next tax season, and you'll be well on your way to getting the deductions your business deserves. Number 1 is startup costs. Many entrepreneurs don't realize that they can claim business expenses on a tax return for expenses that hit prior to the business's launch. There are conditions, of course, but most small businesses can deduct up to $5,000 on your first year's return. Number 2 is taxes, interest, fees, and charitable contributions. If your business pays tax to any state or local jurisdiction, you may be able to deduct those taxes as a business expense on your federal tax return. Yes, you heard that right. Taxes are a tax deduction. I know, it's a mess out here in accounting land. Also, if you pay for business expenses with credit cards, you can deduct any interest and late fees that you incur. You can also deduct banking fees such as card processing fees, fees when making payments, and any others you incur on your business banking accounts. Just like with startup costs, any money you borrow to start the business can be recorded as business liability, and the interest can be expensed accordingly. And charitable contributions are also deductible as well. Number 3 is wages and payroll taxes. Being an employee in your own business has a lot of benefits at tax time for your personal tax return. By paying yourself a wage or a salary rather than a distribution or a dividend, you'll avoid paying a self-employment tax on your personal return. And that allows you to pass the payroll tax deduction to the business. You should also be claiming all other employee wages and payroll taxes as deductions for your business as well. Number 4, retirement plan contributions. Retirement planning and tax planning go hand in hand. The tax benefits you'll receive depend on the retirement plan that you have, an IRA, a 401k, or one of the many others. Retirement plan contributions are an opportunity to receive tax benefits now and again in the future. Businesses can establish inexpensive 401k plans with higher contributions for owners. Other retirement account options are available for small businesses as well. Overall, contributing to a retirement plan will not only give you a deduction, but it'll increase your retirement savings for later down the road. Bad debt, number 5. I actually just filed this one. Most small business owners will have to deal with bad debt at some point. Bad debt accrues when your business is owed for amounts that have not been paid. This could include loans to clients or suppliers, goods sold but not paid for, or the sale of a mortgaged property, just to name a few. The IRS allows businesses to claim bad debt as a deduction if the amount owed is included in your gross income or lent out as cash. And you'll need to prove that the debt is worthless. So if you have a customer or a client who is refusing to pay an invoice, you have to show that if you get audited. Number 6 is home office expenses. If you run your business out of your home, like I do, there's a long list of home-related expenses that you can consider deducting. These can include, but are certainly not limited to, homeowners insurance, utilities, property taxes, home repairs and maintenance, and the list goes on and on. To deduct the home office expenses, you'll actually need to have a physical office in your home. Working on your laptop from the kitchen table does not count as an office in the eyes of the IRS. Your home office should be a dedicated space for running your business, and it needs to be your principal place of operation. Number 7 is health insurance. Depending on the type of business entity you own, you may be eligible to take advantage of a self-employed health insurance deduction on your personal return. This is usually a pretty significant deduction as it includes the insurance you paid, not just to your plan, but to your entire family's insurance costs as well. Number 8 is education and training. Investing in employee education is an important part of many business growth plans, and the good news is those expenses are entirely deductible. You can also deduct any entry fees or other similar costs like attending workshops, conferences, trade shows, and other expenses that allow employees to expand on their knowledge of a subject directly related to your business. Number 9 is marketing. Small businesses need to market their products or services. Luckily, marketing, advertising, and other promotional costs that bring in new customers and retain current ones are deductible expenses. Some of the expenses that qualify include advertising, public relations, website development, email marketing, print materials, including business cards, brochures, etc., hiring a marketing consultant, and so many more. And last, but certainly not least, is travel and entertainment. Some business travel and entertaining expenses are deductible, and others are not. Recently, in 2018, the tax law changed, and businesses can no longer claim some of the entertainment expenses they once had. However, there are still several client and employee travel and entertainment expenses that are deductible, so be sure to do your research. And there you have it. For more business resources, my online self-paced home bookkeeper masterclass, business supplies, gadgets, must-haves, and more, make sure to check out edjconsultinggroup.com/resources, linked below. And of course, like this video, subscribe to my channel and turn on those bell notifications so you'll never miss an upload. If you have any video or tutorial requests, make sure to leave them in the comments below. And for even more behind-the-scenes content of life as a home bookkeeper, feel free to follow me on Instagram @EmmaDawn and connect with me on LinkedIn. And if you need more assistance, personal financial coaching, or bookkeeping and payroll management, feel free to email or visit edjconsultinggroup.com. My firm is fully inclusive and ready to help you along wherever you may be in your entrepreneurship or personal wealth building journey.